Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I'd like to highlight some of the dangers of holding high dividend yielding stocks by highlighting the example of PSEC. This comes in response to a few viewers asking why I simply don't put PSEC or similar companies in my portfolio and hold these for the long term with a great dividend yield. Other business development companies, other stocks like PIMCO, for example, BlackRock has a lot of closed-end funds. PCM Fund, Guggenheim. These are all business development and closed-end funds that have very good dividend yields, but have a lot of danger associated with them. So I thought I'd just take a look at PSEC to kind of highlight the dangers of holding these types of stocks. I will point out I have put out a few videos already talking about and describing what business development companies are, what closed-end funds are. I've also put out a few videos talking about how to evaluate a company's dividend with regards to the sustainability and the long-term growth potential of the dividend. But for today's video, I thought I'd take a look at PSEC because it's been experiencing what a lot of the volatility in these types of stocks can produce. PSEC here you can see is currently trading at 803. If we take a look at the 1-year graph, you can see over the last week here a big drop off here. And overall, over the last year, you can see it's still up 21.22%, but it's really dropped 15 to 20% over the last week. And that's the danger of a lot of these types of funds. You can see over the last 3 months, it's been dropping about 10% or so. 1 month, 11.74%. And over the last week here, 12.05%. There's also the suggestion that PSEC will be dropping its dividend in about 4 months or so. It's declared dividends for the next 3 months. And if we go to my dividend chart here, you can see it's been very, very good with regards to dividends. So it's been giving me about $2.58 every month. This is a monthly dividend stock. And that's only holding $250 worth of the stock. So that's a very, very good dividend yield. But you can see here the big problem with this stock is the volatility. This has dropped 12% over the last week here. And like I said, over the last month and 3 months, it's also dropped quite a bit. So the problem with these particular stocks is that it's really never known when these stocks will drop off like this. The big problem with a lot of these companies as well is that the high dividend yield is basically a reflection of the company giving back net assets. That is basically returning to the investor capital that the investor has already put into the stock. So currently, with a 12.787% dividend yield for this particular stock, it's actually giving back to the investor more than it's making in net monthly income. So you can see over time, it's going to erode the price, the underlying net asset value of the stock. And at some point, the stock value will have to drop just because of that. The other big problem with these types of stocks as well is that the price of the stock has built into it the dividend yield. So if the dividend is cut and this dividend yield is cut, for example, to maybe 7 or 8%, the price of the stock will drop accordingly. So not only will you be losing the dividend, but you'll also be losing a lot of capital with regards to the price of the stock. So if you bought in at $9, $8.30, anything above its net asset value, you're going to be losing quite a bit of money. I know a lot of investors have lost quite a bit over the last week or so. I was lucky enough to buy in at $8.29, but even now I'm losing a lot of capital here. Again, I only have $250 invested, but you can see here it's down 3.11%. So if I had, thousands of dollars invested, I'd be losing a significant portion, which would not be made up by the dividend to the price of that particular stock. So I've received quite a few dividends already, but even taking that into consideration, that 3.11% is a very, very large drop. So even that great dividend yield may not necessarily make up for the price drop of the stock. So that's why a lot of portfolios, that's why my portfolio does not have a lot of these stocks incorporated into it. I do have a few here just really to kind of feel out some of these particular stocks. These are some of the first purchases I made with my portfolio here. And a lot of these I'm simply keeping to kind of see how these play out. Again, this whole portfolio is about learning, and part of that is learning about business development and closed-end funds. So just wanted to put out a quick video here highlighting some of the dangers of some of these stocks here. You can see Guggenheim has performed very well. It's performed very well for me, up 11.82%. But PSEC just a few weeks ago was up 10% for me. So these are very high volatile. They're very high reward. If you can buy in low, sell off high with that great dividend yield as well. But again, that's why a lot of investors don't consider these to be good long-term investments. That's why I don't have a lot of these in my portfolio. And this is why I don't suggest you putting a lot of these in your portfolios either. But let me know what you guys have done with these types of stocks: PSEC, PIMCO, Guggenheim, BlackRock, other business development companies, and closed-end funds. So kind of with that, I'll end the video. As always, if you enjoy my videos, feel free to like, share, and subscribe. This whole portfolio is about learning. If you have any good ideas for future videos, let me know. And until next video, we'll see you then.